city, and I'm gonna do a city show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night, and with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go ahead, Slim.
Hi, I'm Steve Miller. Call me Slim. And this is the Ask Slim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward at what might happen in the next week, and some good stuff in the middle. Well, this has been 2 weeks because I was on vacation, and there has been a lot that's gone on since then. Biggest influence still seemingly being oil, and in fact the market's still very affected by the commentary going on by the producing countries out there. OPEC and Iran seemingly commenting almost every single day, talking about freeze or cuts, and that's been moving the markets around, especially overnight. Then the U.S. markets, however, seeming to be somewhat resilient. The stock market, at least 2 dips in gold, as it seems to have had a tone change since I've been gone, like somebody flipped a switch. Market really doesn't want to give much room on the downside in here, and it seems to be able to rally a lot easier. As a matter of fact, we did expect while we were away there was going to be a dip and that the market would then move back to the upside. We did have that with a 4-day decline, and then a 4-day surge where the S&P 500 moves up some 120 points. Really some big movement in there. Gold, well, that is choppy and pulling back after a huge surge to 1250. That was our target for the year, and we're working on revising that in a big picture segment we're going to be doing. Bond market, well, also gave a little bit of ground, and that's after a huge surge on the discussion of NIRP, negative interest rate policy. An amazing thing that the world is in that place, and there was a buying panic in there, essentially as Japan has moved to a negative interest rate policy. Also, oil still groping for a bottom, and we think that that bottom is in place in spite of record supplies. You do get markets to bottom and move up when the news still looks pretty bad. That's where we think oil is getting ready to make a bottom in there. The dollar, well, it had a modest bounce, and that has helped with the gold pulling back a little bit, but that looks like a bear flag to us, and we're expecting one more pullback in the dollar. That's probably going to bring another rally and test of gold. We'll look at that in our short-term view later on in the show. Politics, well, everywhere you turn, and I'm a news junkie, and I'm always watching the stations and all the political rhetoric that's going on. Overall, I think politics are casting a dark shadow over the stock markets. None of the candidates are favorable to stocks, if you ask me. Of course, that's just my opinion. Hillary, Bernie, you get them in, just more failed liberal policies. And then, of course, Donald or Ted or Marco, you get them in, and what you get is, well, a move to sensible governance, much less fiscal spending, and what that does is push the U.S. into a recession as we take the well-needed medicine. So nothing there seems very favorable for stocks, does it? And that's why I think the stock market basically is in a bear market and is likely to continue this choppy lower action over some months to come. Speaking of liberal politics, back to the Japan discussion, their GDP falls 1.4%, and that's after more stimulus, and we've had this 3 arrows of Abenomics, and the best thing that could happen for Japan is that Abe and Kuroda, you just quit and leave the markets alone and let them heal themselves. That's probably the best answer. But there I am again with my political slant, and you know where I'm coming from. So let's take a look at what happened this week as we look at the 60-minute chart of the S&P 500, as we look at overnight trading and the trading during the day. So this is the gray area is the overnight trading. The white area is the trading during the day. You will note on Monday there was no trading in there, so there is really nothing to show in here, as all of this trading was done overnight right over here. Yeah, they do trade the futures in here, but you see when the U.S. market opened, it was very quiet. And of course, the major stock exchanges were all closed on that day, and Eurozone was up 2 to 3%. Japan soared 7% as they announced that 1.4% negative GDP on more stimulus hopes. Negative interest rates, well, they go into effect in Japan. On Tuesday we come and you can see, now watch the way we have this marked off. You can see that, well, see that red arrow, oil production freeze is what they agree on versus a cut by Russia and the Saudis and Qatar and Venezuela. What that did was disappoint the oil market. So oil fell in here, and that got the markets opening lower as the overnight markets fell. But the Eurozone ended up mixed. China had a big gain, 3%. Euro stocks on the day, they move up. You can see that right there. But oil is up, but then has that dip on that disappointing rhetoric, as there is no cutbacks mentioned by the producers, just simply freeze in that area. Comes Wednesday, everybody's waiting for the FOMC minutes, and FOMC comes out late in the day, and they say that, well, you know, there are increased level of downside risk. They're concerned about China and emerging markets, and that's me quoting right there. Forget about the March rate increase. That's not coming. In fact, there's lots of Fed heads coming out and warning that they're not anxious to do anything more at this time. Look what happened overnight. You know, right in here, the markets took a dip. And what happened that after that, Iran commented on the stabilization efforts for oil, and they saw that as favorable. Oil moved to the upside. I'm going to show you oil versus the E-mini S&P in a couple of moments, and you could see how these the amazing tracking of oil and the stock market. On Wednesday, the Eurozone, they were up 2.7%. Asia mixed, Japan down 1%. And that's after a 9% two-day surge in Japan. Oil has a 5% gain, and that lifts the U.S. stocks during the day as that big oil moves comes on that favorable Iranian comment. SPX is up over 110 points from the low in just 4 days at that point. PPI comes out up 0.1%, but housing starts are bad, down 3.8%. Comes Thursday, the Eurozone has a follow-through. They're up about 0.8%. Japan up 0.2%. China down a little bit. Now there's comments in here that Iran is favorable to an output freeze, only not them. You know, they want everybody else to freeze prices so they can benefit, but they figure that they've taken enough pain with their sanctions, so they're not really willing to freeze it, and so you get a little bit more of a pop in oil, 2%. But then the futures then pull back. You could see in here as kind of a sloppiness starts to hit the market after this big jump that we saw right in here in the E-mini S&Ps in just a few days. The also commenting on the Fed is Fed Bullard. And he talks about actually reversing policy and more QE. How many times can I underline more QE right here as the insanity seems to continue? We don't need a Fed, you know. I'm one of those end the Fed guys. Now comes Friday, you get a rally going on here. Saudis say they will freeze but not cut, as their language seems to change a little bit, and they want to protect their market share, they say. So you can see oil then then gets another pullback, and so do stocks. They get a little bit of a comeback during the day on Friday, but here at just past midday, they are sloppy as oil does edge lower. World stock markets follow. Small declines in the Eurozone, China, and Japan, and U.S. stocks are weak on that drop in oil. Energy stocks leading on the downside here on Friday. CPI comes out at up 1/10, and the core up 3/10, which is, believe it or not, the biggest gain in 4 years. And that core is now year over year up 2.2%. That gets you above that Fed target. So they have to really think about what that means as far as their next actions. I said to you that I'm going to show you a comparison, and I'm moving in another chart right here. This is basically the same chart that I just showed you. So we're looking here at about 8 trading sessions. This highlighted blue line right over here that I'm talking about, that is the oil market on us, and it overlaps the 60-minute chart. And this shows you how the stock market, the ES futures, just continue to follow that, to set the trends for the E-mini action in here. And you can see great correlation in here. It's all about what oil does every single week, and you can see how that correlation is working. So I wanted to show you that. I thought that was interesting. Let's take a look at our calendar for the coming week, and you'll see in here the earnings reports. The top section in here is the earnings before the opening. You can see in here, and some pretty interesting ones coming. Macy's and Lowe's on Wednesday, Macy's on Tuesday. Then you get some of the other retailers, Kohl's right over here, Sears right there, and JCPenney, which is a stock that I love to hate, in the morning on Friday. After the close, you can see here First Solar comes out, which is a very problem stock. Then you get on Wednesday Hewlett Packard, and comes Thursday, you get Autodesk and Baidu, some pretty big ones in there. And then the news during the week, you can see there, as far as the major economic news, there's no real market movers here that you can see. Consumer sentiment tends to possibly move the market here on Friday, but basically that's the calendar, and we don't see anything major in there as far as potential market movers. It's much more all about what oil does, and you can see, as we showed you that chart, the market is plainly just tracking the moves in oil. And we would say that, being that we believe, and we'll show you towards the end of the show, that oil is likely to get a pop soon, it probably means better stock markets coming, at least for the very short term. That's it for the opening segment. We'll be right back with the best and worst of the week. For the best of the week, there's lots to talk about. In a week where the stock market, well, has had an upward bias, we've had some remarkable moves. In fact, of the 330 stocks we follow, more than 10% have had gains of more than 10%, and even all the way up to 40%. In fact, 43% if you look at FCX, Freeport. That, of course, is a copper and gold stock that has been totally annihilated just in the last year, coming down from the 20s all the way down to a low of $3.52. Well, this stock has basically been a double off that low in the last couple of weeks, and we're going to take a look at quite a number of stocks here because there's been quite a number of movers. So first one we're going to look at is Freeport-McMoRan, and you can see that right here. We have a beautiful example of our cycle analysis, and you can see this arrow right over here points down to where that cycle low was due. It actually came a couple of weeks later. 352 is the low, and it moves on the upside, 43% gain. You can also look at other material stocks. We did a special report on these in our stock sectors a couple of weeks ago, and some great results in there for our traders. as U.S. Steel, ATI, those steel stocks, Vale, and tons of other ones, Rio and BHP Billiton. They have just had a great time here in major rebounds. Of course, that was some really depressed group there. So Freeport, 43% gain on the week. Wynn Resorts, the next one we're going to look at, WYNN. This one gains 30% on the week. Let's take a little closer look right in here, and you can see our gaming list. Let's just go back out a little bit right there. Our gaming list right over there, and you can see that we look at Marriott, MGM, LVS, Wynn, and we also add in the cruise lines in there because, well, they're entertainment and gaming. Kind of an odd group, but that's how we group them. And you can see in here that this stock gained 30% off of this low right over here. Note the green zone that it was in right over here as it starts to move up. The fact that it got above this level is significant. It hasn't done it by much, and you can see the resistance zone right in here. That is we believe to be a major base forming in this stock. We think the all-time low or the multi-year low has been seen. We don't expect it to get under there again, or we expect it just to test it way out over here and then potentially get into a much more favorable period after that. So right now we're going to look at this stock as having done put in a major bottom, and this stock was named best casino operator of the year. Major bottom, we're going to call it in there. LVS, also a much better pattern at resistance right now, so maybe get a little bit of pullback in there. Twitter on the list of one of our best stocks for the coming year. This gains 30% after getting annihilated. So actually you can see we have two potential cycle patterns in there, and the dotted line is always something that we do now when we want to show that there's a potential revision in the pattern. Beautiful morning star there on the weekly chart as this stock gets a very big gain as their chairman buys 122,000 shares of stock. And that is a pretty good vote of confidence in there on Twitter, and we think that one is definitely a buy in there on some dips. We're going to see some higher prices. I would rate that a high probability based on this news and based on that pattern. Brocade, BRCD, we'll take a look at that one. 20% gainer on the week. It beats on earnings. Analyst upgraded, and you can see in here what looks like a pretty good bottom. Note the cycle analysis in here suggesting that being the low, and then a rally right there. You can see this timing in there. Those are our timing spikes that say that's where the low is due. Giant rally, 34-week moving average always tends to be resistance. That's also around the 61.8% if you look at this cyclical high point to this cyclical low point. So that would be a normal place for it to pull back, but overall this is a magnificent pattern, and we would say on pullbacks you do buy that one. So take a look here at the daily chart. We'll bring this in for you here, and you can see here this big breakaway gap. Momentum turned up on there and moves well above the 89-day moving average, and we think that this one is a solid buy somewhere around that. We'll call it 9 to 930 area. If it pulls back in there, I think you've got a pretty good opportunity. Take a look at Applied Material, AMAT. Take a look at it on the weekly chart for a second. And AMAT, there you go. And this one, you can see also a similar occurrence. Note the revision there on that cyclical pattern, and lines up pretty nicely now. And there is a big upturn. We call this a major base that's formed in here because this low is above this low right over here. Now turning up, this stock is a super buy on dips also. Applied Materials, AMAT. And take a look here as you see on this chart a breakaway gap, and that is a great looking pattern when you see that momentum turning to the plus side. Again, we'd like to buy some dips in here. The breakout number really is at around 1780, so it's trading at 1873 as we do this, and I would say 1780 to $18 looks like a nice long side entry on this one. Take a look at CSIQ. This has been one of our favorites if you want to buy solar. Let's take a look here at the daily chart, the weekly chart first, sorry. And this one gains 16% on the week as the company makes favorable comments. Now, we like this stock. We think it's one of the best of the solars. Great earning power, super cheap, very low PE. Now it's under $8. And this at under 8 on the PE. This pattern, however, is suggestive of the fact that the real buy time may not be out until May or June. So we're not jumping on this one, but this is a 16% gain on the week and very worthy of discussion and being on this best of the week. IBM, we'll also look at that one. IBM has been our list of stocks that we have hated and have expected to do really poorly, and it has done very poorly. This stock now, they come out and they buy a healthcare company, and then the stock puts in a bottom. You know, the green zone in here, and this green zone is suggestive of first week rally in this cyclical phase. That means that even though it's in the resistance zone right here, we think that a pullback there in IBM is going to give you a good buying opportunity. So we're looking at an intermediate bottom in place in here and likely to get some better prices. So what are we looking for? Well, the stock now is trading at 133. We're probably going to look for some resistance in here, some kind of a pullback, and then getting up here to about the 138 number, which is that resistance number. So like to buy it under 130 right now and then play that 10-point trade on the upside. That's pretty much what that looks like. So that's all the stocks that I'm going to show you right now in the best of the week. It's been a good week for a lot of stocks. Yelp gets a 22% gain. I think that is still a negative stock. Not liking that one at all. Nvidia gets a 22% gain. It beats on its earnings, and it's at resistance right now, so that one I'd be looking for a pullback. Also, Chipotle, that one up 17%. Remember, it got absolutely annihilated based on the difficulties it had with E. coli in its restaurants, and it has now had this big gain. We see resistance in there at the 540, 545 number, so could get to that area and pull back. Basically, we think that stock has seen the worst of it also. So that is the best of the week, and in a moment, I'll show you the worst. Worst of the week. This is going to be the shortest worst of the week segment that I have ever shown you. In fact, it's remarkable how there are very few stocks that have done poorly this week. Well, you can look at SUNE, which is a solar stock that has been in huge trouble, down 35%, now down to $1.45. That stock company has issues. Same thing for Whiting Petroleum, WLL, down about 16% for the week, down to just above $4, and another company with issues. Those are the big downside movers other than Devon, and that's the only one I'm going to show you in this segment. They came out and announced an offering, a stock offering, and the stock has already gotten annihilated. We talked about this one as potentially bottoming about 4 weeks ago, and it looked like it, but now they come out with a 13% dilution of their stock, and that's not good. Here you'll take a look that we are expecting a bottom, and we actually think that this this offering that they have in the stock is going to make a bottom, and you can see in here that there is a cyclical action that has these lows right over here as the important cycle lows. You can see how that shapes up and how there is a great rhythmic action. You can see that right in here: advance, decline, advance, and decline, and entering into this advancing stage. This stock down 13% on the week, and it's still a stock that looks like it's bottoming to us, and no sign of it yet. So that's the only chart I'm going to show you for the worst of the week. Also want to mention that MRO in the energy category, that's Marathon, and RIG, RIG, that's Transocean, both down 3 or 4% on the week. We think there's a bottoming going on in those stocks, and we think that they are buyable. Also in this category of natural gas stocks like Devon, APC down about 3% for the week, and we think that's in a buy area also. That is the worst of the week. Emails and tweets, got a good assortment. Take the first one from PC. He says, Slim, your strategy of adding positions with momentum, that's when something is going right, you add a position to it and try to maximize the gain, and cutting losses has worked great for me. He says, I wanted to ask you, however, how many different strategies do you employ in your portfolio at one time? As we evolve as traders, he says, and learn more methods, is it smart to diversify by strategy in your portfolio, or do you see this as something that can confuse us as traders? I actually get a lot of questions about that. Not only that, but a lot of people I work with have difficulty with that, trying to trade multiple strategies. That's especially when they are new traders just starting to develop. And that's really, maybe it's in the first 2 years or 5 years that are really early developmental stages for traders. So multiple strategy approach can be difficult. The problem is dealing with different time frames and the associated charts and studies that you use with each time frame. They can contaminate each other badly. So if you're, let's say, a swing trader and you decide you want to do short-term or day trading, so you go from using, let's say, 2-hour charts and daily charts to using 3-minute and 5-minute charts, well, when you start looking at those shorter charts, they're going to give you entries and exits very fast. I mean, probably 5 a day or more. And where your swing trades, you're looking at entries and exits potentially 1 a day or 1 every 3 days. So the shorter term time frames are going to contaminate the longer term time frames. You'll never be able to swing trade unless you really get accustomed to that if you're trying to use those shorter term time frames. So that is a big issue. And trading futures and trading options, or trading futures and trading stocks, there's so much movement in the futures that they can also throw you off. So there's a lot of chance of contamination of trading multiple strategies. It takes a long time to be able to do that. If the question is about your mix of strategic option strategies, that's really a different question. And still, I think there should be a limited number of strategies that you use for strategic options. Most people are going to be looking at, when you look at different strategies, you're looking at, number one, variations in ways to capture option decay. Number two would be ways to trade directionally, and even those can tend to contaminate each other. I say that really you should be comfortable with 3 or 4 different type of option strategies that you use all the time, and I would also stay in the same time frames also. Let's say you're a trader that is trading for swing trades. You might want to be trading, let's say, 3 or 4 with 3 or 4 weeks left before expiration time, and stay in that time frame. If you're trading weeklies, it's probably best to stay in that time frame to avoid a lot of confusion and contamination in your trading. I've been trading 41 years, CBOE 1974, and I'm really good at trading multiple strategies. Still, I do try to keep my strategies in options down to about 3 or 4. I tend to use a lot of vertical spreads and condors and butterflies and diagonals. That's basically where I am in my option trading, and then I'll use some directional trades on top of that to maneuver the portfolio. So I do also keep my number of strategies and options down. Good question. And W writes me and he says, I've been making money shorting Federal Express, FDX. I plan to short it again soon, he says. I compared it to UPS, he said, on the weekly chart, and UPS does appear to be stronger. He says there's also what appears to be an island. We're going to look at that in a second on the daily chart, and that makes him want to be careful in shorting UPS, be a lot smaller. Obviously, interesting to say that. Still wants to be on the short side, and he said he'd be more aggressive, I guess, in Federal Express, FDX. And let's notice his analysis makes sense. It actually does. It took me a couple seconds to look at that and see exactly what you're talking about, but I do see that, and we'll take a look here. Here is the UPS charts first, and again, on the left side is the weekly, and on the right side is the daily. So here in the daily chart, I'm pointing to this island that you're talking about right there in the slim ribbon. Slim ribbon is strongly positive. Note the rejection here at the 89-day moving average there on the UPS chart. You can see that there, and on the weekly chart, now we'll take a look at this one here, you can see the cyclical patterns in there, and as we got into this rising phase with these two cycles both pushing on the upside, you had a nice rally right up here to the 618% resistance level. Of course, everybody who gets our charts gets all of these in there, and that's where you see it rejected. So you see the nice big strong rally here in UPS, and again, that pattern that you saw right over here, let's blow this up, is this little island that it left right there, right on the 13-day moving average, and then moved right up. So that's got a pretty strong look to it. When you switch over to Federal Express, FDX, you're going to see a bit of a different story. First of all, this has our colored phases in it, and it's still in this red zone. You could see, contrary to what we saw in UPS, this rally has been rather small. It also exists in this current downtrend, so you're right about that FDX does look weaker, and there'd be a reason to be more aggressive on the short side. Take a look in here. Now remember, we said that the pattern in UPS got right up to the 618 right here. Well, you can see we barely got up here above the 32%, and then started to back off again in this resistance zone. So you make a very good point when you say that Federal Express looks weaker than UPS, and you want to be more aggressive selling Federal Express on the short side. I think that these charts really do tell the story. Similar question from GW. She asks, comparing Whole Foods WFM to KR, a competitor that I don't follow normally, and wanted me to look at those, and says she sees KR as a better pattern, and wants to buy pullbacks in there, and even looking at buying KR and shorting WFM, and wanted to know how I felt about that. Well, the truth is, based on these charts, I agree. Let's take a look at Whole Foods WFM first, and we'll see in here that this stock has been in a downtrend. You'll see two very distinctively different patterns in here when we look at this. This is the whole food pattern, and for cyclicality, which of course I look at, you could see in here the cycles as they are drawn out. Here's a very modest rally and this decline, this rally right over here, and then in this declining phase right over here that's due to decline through May, is the way that pattern sets up. So you can see Whole Foods has been in a bad shape. As a matter of fact, when you look here at Whole Foods on the slim ribbon, it's been very difficult for it to stay positive. It's been very choppy for quite a number of months in here, and now it's just turned to neutral up here, back up around this 89-day moving average. But it's been a rough go for that. Now take a look at KR in here, and you will see here that this is Kroger. This is a much different pattern, and you will see that, I mean, it's been incredibly strong. Now I put some cycle brackets in here. I find this very erratic, and I'm not 100% sure about the way these cycles lay out, but compared to that big downtrend that we saw in Whole Foods, you can see Kroger is much stronger, and I would say that the Whole Foods pattern doesn't prove that it's going to get any better. Kroger is weakening. That is the issue. I agree that Whole Foods has been bad and continues to be weak. This pattern in here is a little bit questionable to me. Let's take a look at what we look at. First of all, notice the top right here, perfect evening star, double evening star right in here. That made the top. As a matter of fact, this one was actually an island. And then it had a big break. Now, when you look over here, you see this. This is an evening star or a kicker pattern right over here, and then another kicker pattern right over here. So I agree with you that Whole Foods has been weak and remains weak, and I'm going to agree with you that there's a potential for a pairs trade in there, but I'd be kind of careful on the entry in here because Kroger is weakening in here, and I would say there's some damage. And I probably wouldn't want to get, on the long side of this above the 36 level in here because this is starting to show a lot of weakness in there. So, yeah, it's been stronger, but you really got to question if there's some kind of a topping pattern going on in here. And I don't like these kicker patterns that we're seeing in here because that means that there's sellers that are stepping in. As soon as some significant buying comes in, then they wait, and all of a sudden the next day there's a gap down. That's not a good sign there in Kroger, and I would be a little bit concerned about that. I'm going to say, yes, I agree on your overall analysis, but I'm questioning about the timing now, looking at this as far as the patterns here say about doing that pair trade. So that's a look at Whole Foods and Kroger. Remember, while they're in the same industry, grocers, they're actually very different segments of that industry. Now, take a look at MW's question, which is, he says, I'd be interested in hearing on your take on the refiners, particularly Tesoro and Valero. He said, you'd think oil, which is still so beaten down, that these guys, meaning the investors, would be catching a bid. Investors would be moving in there, but no such luck. So what else is driving this sector down? This is a very interesting sector. What's driving this sector down is that there's concern about inventories. Now, generally when oil's very weak, the refiners do well. Their margins are better because oil is their input cost, and oil's cheaper. They should do better. What the fear is that they've gotten hung with inventories, and there's going to be markdowns, and we've actually seen some of that. I think investors, though, in the longer term are getting this wrong, and that once we get past this blip of this markdown of inventories, then I think that the margin factor is going to be much more important. And we're going to see these stocks actually moving pretty sharply to the upside. I'm going to put up all four of them right now that I follow. Tesoro, Valero, Phillips, and Marathon. And Marathon's gotten absolutely hammered. And we'll take a look at what the timing is on these as far as when the time would be to buy them. So we're going to put up first Tesoro TSO is the first one, and we'll bring over that chart. And you see in here that it's been absolutely hammered, where this stock in here has come from roughly 120 all the way down to 68 low this week. I mean, it's been devastating. Now, based on, we're going to look at a couple things in here. First of all, the cyclical pattern are suggestive to a decline through late March. Right there, you can see that right in there, and I'm going to blow this up now for you to see, and you'll see this pattern in here that we have seen it. We saw it break down, and we have been negative on it, despite the fact of the margin, the situation of what we believed would be stronger margins overall. You can see the 34-week moving average, how it's been massively supportive. And then when it broke under here and this cycle broke down, it pointed to a decline right here that is still in place and goes into late March into Tesoro. Now take a look here at the slim ribbon, which is what we use for our momentum study. You can also use mobile breakout bands, very good for that also. This is where it turned negative. You can see that red arrow, it's kind of faint there, and broke down under the 89-day moving average, and you can see it's been free fall since then, a breakdown from about 100 to that 68 level right there. So that's a look at Tesoro, and it's been in bad shape. So we expect that sometime in about a month is when this will begin to improve and be able to get some footing and start to move on the upside again. Let's compare that to Valero, VLO, and you'll see, well, almost the same pattern. Cyclical patterns in here also point to March. You can see our support zone in here where it made that hammer bottom. We expect it to test that support zone again in Valero. Take a look at now Phillips PSX, and this one has a little different cyclical patterns in here, and this one is suggestive of maybe even more trouble than that, as it's still in this downtrend that may go for, well, quite a bit of time. So I'm not that excited about Phillips. MPC, which is Marathon, this one also points to coming down into the March time frame. This one has come from 60 to 30. It's been cut in half, and this is the one that really showed some inventory issues, and it's going to take some time to clear the path in here, as you could see in all of these. That March time frame, late March, maybe early April, is when we expect the bottom to come in that group, and then I think that this inventory issue will be behind them, and we'll start to look forward at the benefits of improved margins. You had a good point there in wondering about when that's going to happen, and I think that it's not that far off. Mark writes me, and I love this email. He says, I cannot tell you how important your charts are to my trading. Well, you just did. He says, your cycle bracket analysis, support resistance levels, and notes about significant technical indicators have given me a new confidence in trading that I've never had before. As a person that wants to make his own decisions about when to buy or sell or short, information and confidence is key. That's really what we try to do here, is give a lot of information, let you make your own trading decisions. That's a lot about what our rankings and setups service is about. He says, your videos continue to be very informative and helpful as well. Thanks again for this great product, Mark. Mark, that was great. It's now up on our testimonials on the site, and that is really heartwarming. And I've had this one from several viewers. In fact, I want to say many. It's gold hit your target that you had at 1250 already. Yes, gold was in the 1000s at the beginning of the year, and we had a target of 1250. I actually thought it was going to take a little longer than that to get there. So they're all asking, what's the new target? Or is this it? Is it going to turn around and go down right now? Or is it going to end up much higher? Well, the answer to that will be found in my coming gold big picture analysis, which will be out in the next couple of weeks. And that, of course, is for members in our big picture analysis category. So you'll have to become a member to see that. Our videos only $27 right now a month, and 3 months is $73. We're still in our introductory rate, so and the price is going to go up in a couple of weeks. So now's the time to get in there and subscribe to our videos. And as far as gold goes on the short term, well, we're going to look at that in our short-term view coming up right now. Before we get to the short-term view, I want to tell you really quickly about our level 3 membership. I'm focusing on this one because we've had it up and running now for a couple of months, and we're getting some great results and great emails from our viewers. What we do is we send out every single day a notification that we have put out our rankings and trade setup service. What this is the best 70 tradable stocks, futures, and indexes, and we rank them by 3 different time frames. That's long-term, intermediate term, and short-term. And we put our rankings also for our cyclical analysis. All this on basically one page where you can see all of this great analysis in a glance. Also, we put out trade setups. That's when a particular thing or things happen on the charts and we believe that there's a high probability entry. We leave the trade up to you. We're just letting you know it's time to look at the charts and look for the fact that something is setting up in this particular symbol. And so we send out this a notification every single day, sometimes in the afternoons if there's more also. And we've had a remarkable record, and viewers are letting us know. As a matter of fact, we wanted to wait until we had over 50 trades done so that we can have, at least enough to get a pretty good feel. Actually, our first 56 setups that we've sent out, we have had a favorable setup. In other words, the possibility for a profitable trade of some significance at a rate of 76.8%. That has been amazing. That means that less than 1/4 of the time the trades have been threatened, and more than 3/4 of the time, well, it's been pretty easy to make a profit on those trade setups. So wanted to tell you about that. It's been amazing, and thanks to all that have sent us those great emails. A quick look at our website right now, and I'll just walk you through how to set that up and what's included. This is the Ask Slim website, AskSlim.com, and if you want to become a subscriber, all you have to do is go to membership options. You see me highlighting it there. Now our deal is where you simply get the archives to our weekly chart, to our weekly show. That's level 1. Level 2 is Bet, which is 7 different categories of educational videos. Fantastic stuff in there. We have a big and growing library. Level 3, Raise, is the one we're going to focus on here, but level 4, All In, gets all of the charts that you see plus everything underneath there. So if I click on Raise, you can see there, it brings you to the level 3 membership. And what's included, everything in level 1, everything in level 2, which is Future Speak, Tools for Text, Trader Psychology, IRA MO, Stock Sectors, Big Picture Analysis, Style, Strategy, and Plan. That is 7 different video categories, and I think you'll really be able to raise your odds of success with that. And then plus you get the rankings and trade setups that you can see right there, 70 of the best trading symbols. You get setups just about every single day, sometimes many more than one. And in addition to that, you get email support. In other words, you can email me directly 3 times a week and ask me for up to 3 symbols each time for chart interpretation or on trader issues that you want to talk about, like some coaching light. So amazing that level 3 subscription, all that you get there, and you get, to be able to check on things with me, also interact through email, all those videos, all those trade setups at still our introductory price. It's crazy, at only $77 a month. And I don't know where else you're going to get all that. And there's even a 3-month subscription that you save 10%. So do that. We're still going to be offering this introductory prices for only a couple of weeks. And then after that, prices will be going up. We've been planning to hold that for our first 6 months, and now we're getting just past that period. So sign up, become a level 3 member. You want our charts on your TOS platform. Then you become a level 4 member. You get to see all the charts, all the analysis, and get everything else in there also. Wanted to tell you about that before we get into the short-term view, which is coming right now. All right, it was 2 weeks ago that we did this last, our short-term view, and we'll take a look at how we did based on this 2-week period. Went back and reviewed the charts and what I said, and I'm going to give myself about 60%. Where it went wrong was that in the case of light crude and gold, I expected a dip to come and then move to new highs. Well, the move to new highs came, but the dips never did come down to the levels I was looking for. In the case of the euro, that one came down exactly to our level we were expecting, but it took just a few more days to get there than our anticipated timing. And the same thing for the bond market. We expected it to go down and then go up again, and the dip never got near the levels that we expected during that time period. So we don't get a lot of credit for those. basically bigger picture right, but the real short-term view not being able to get those dips that we were looking for, which would give the best opportunities. As far as the stock market goes, we'll call it another bullseye. As the market, we said it would drop 2 to 4 days to the support area and then have another big rally. That is exactly what happened. So we get a lot of credit for that. The VIX did a little bit better than we expected during the weakness that the market had, and then of course turned down again. We'll look at all those as we take a look at what we think is going to happen in the next week or so. So we'll take a look here at these charts, starting out with light crude as we always do. Worth noting in here, you could take a look back about a month ago or so when we saw this breakdown right in here, and that suggested lower prices into early February, we said. Well, sure enough, we got that exactly, and those lower prices materialized right into the middle of February. Now, we've had a slight little shift in our cyclical patterns in here, and you can see the adjustment on this dotted line. Well, where are we right now? We actually believe there's a high probability this morning star you're looking at is going to be a very important low. So for the short term, what we're looking for is a few more days in here. We're going to call it a couple more days on the downside. Hold this little support area in here. We'll call that 3120 down to about 3050, and then move up again. So that's the kind of shape we're looking for in this week, where it comes down, we'll call it several days potentially, and then moving up again. Our target up here is about $35 once that comes. So we consider this to be a buy period in that little dip. Let's hope that comes a few days and into that zone, and then I think we're going to be a buyer. Let's take a look at the gold market /ZC, and you'll see in here that this shorter term period we're looking at here, well, we're expecting that we're going to get a test of those highs. You can see that it looks like this cycle right in here, this decline, that looks like it's turned up again. So it happened a little bit early, and so we're going to be looking for a test of this area. We did note earlier in the show that we're expecting that the dollar would have a bit of a pullback, the euro currency then another rally, and then that should be supportive to gold. So that's really the phase that we believe we're in. Silver's a little different phase that you could see right in here, and that's already in its up move. So we're going to look for gold to get up to test those highs. We'll call it 1255 to 1265, and then roll over to a bigger correction that's lining up here out into March. You can see those cycles all pushing down right there, 2 of them in gold and 1 of them in silver. And so March is a time period we're looking for a correction. So we think that test the highs and then get ready to move on the downside. We'll look for that kind of a pattern in here for this next week or so, where it kind of does one of these and then rolls over like that. We'll see how close we can come to something like that. For the euro currency, again, we expected that to have another move to the upside. Often moves opposite of the dollar and with gold there. So what we were looking for was this area to get support right over here. You can see it's come down right to it a couple days. This is the pattern that we're looking at right here, and we're again looking for a test of that area where it got up to just a week ago. So, you know, we'll call this area in here somewhere between these highs of about 113.65, 113.90 in there. And that's the area we're looking for the bounce to come. And then similar to the pattern we're looking for in gold, we expect this then to roll over and then get into a more serious correction as the dollar gets into a strengthening period. That's really the way all of this is setting up. Next thing we're going to look at is the bond market /ZN. And we'll see in here as we look at this, come on up here, that there's that similar pattern that we're looking for. You can see here, this is also the ZBs line up pretty closely to this. So the way this shows is that we're kind of looking for this double cycle right in here to nest and give us kind of a little choppy period right in here for a couple of days. Maybe Tuesday or Wednesday is the time period that that low is due this coming week. We'll look for it to get below this this level in here of the we'll call it 130.03 right over here, and into this support zone between this. This is the 32.6. This is the 50% right there, and so that's kind of the area we think it gets support. And then we think we're going to get a rally after that. And the rally, we think we'll get at least into this minor resistance zone. So this is the pattern we're looking for in this week, to do something like this, early down and then up, and get up into this area of 131.25 or higher, into this tail that you can see right over here, and then roll over again for some bigger correction in there also. If you get our futures speak, if you remember on Wednesdays, we talked about the a bigger intermediate correction that's due, and if you become a member, of course, you'll get those videos and you'll be able to see what our targets are as far as timing for corrective period there in the ZNs. So that's a look at the first four. We'll talk here about the stock market. As we said, the stock market did as we expected. Had a pretty big plunge to the downside, and then had a big reversal back to the upside. Pretty serious. We are actually looking for the rally that we're in to have a little more time to it. A little bit of cyclical shift that we say looks in there, and it may buy a little extra time that we thought and extend out the time period that we think that ultimately the big decline is coming, or the next leg of the big decline for the stock market. So we think we're in an intermediate upward correction at the moment. We'll take a look at how this shapes up here as we look at the S&P 500 on the daily. And these dotted lines in here is essentially what we do is we put in our projections, what we expect to happen. The ones that are the solid lines are cycles that have already, completed. And then we leave the last one in here as a dotted line, and you can see all of that action here. We expected it to come down, actually touched 100% Fibonacci right there on day 16, and then started to move up, move back into the resistance zone. So what we're expecting to occur now is that, we get a little bit of a correction in here. Maybe it's a couple more days or another day or something right in here, and then we think we're going to move up again. And we think that this resistance level that we saw over here and that it touched perfectly, 1947, we believe the odds are high that it's going to take that out. In other words, fool a little bit in here, get up, take out the 1947 level. Maybe even this area here at 1978. We'll give that a lower odds possibility, but maybe just getting slightly above here, and then turning down again. And somewhere out over here, after maybe one more choppy cycle, we get into the major decline again. So we'll have to see how that shapes up. The key to us is, can it get through this zone? How long does it last? How deep is this sell-off that comes in here? And then this rally in here is likely the setup for the next major decline. So that's where I just went out a little bit more in an intermediate period. But basically what I'm saying is that the shorter term period that we're in, this rally is likely to continue for some number of days and get through this level and then roll over. So that's what we're looking for. Take a look at the VIX. The VIX took a slightly different pattern than we expected it to, in that the rally that we had right over here, we didn't think it would get that far, and we thought it would roll over. So now, based on the fact that we think that the stock market rally has got some more time to go, this is the way it looks. Remember, we said another few days on the upside, and that takes you down for another few days on the downside right over here, and then turning upward again. So we're not sure of the number of days. It might be 3, 4, 5 days of stock market rally of some significance, and then turning down again. So that's this period right here. We think that anywhere around this 19.5, 20 area on implied volatility is the place to buy it, because then we think after that it's going to be zooming on the upside again. So we'll just look for this to follow the inverse of the stock market as it always does. Think about that 1947 level and the test of that number, and look for it to fail. Once it tries to get through there, it might be a brief spike that's higher, and then the stock market turning down and the implied volatilities turning up. So that's what the VIX looks like. So that is it, our short-term view for the coming week. Always hope that whole show has been valuable to you, and always love to get your comments. If you're a member, you can just click on email Slim or ask the dealer to send in your testimonials. And if you're not a member, you could send your comments to slim@askslim.com. Don't forget, become a member and use our this advantage of this time to get our introductory rates, and because those are going to go up soon, and based on our level 3 performance, you don't want to miss it. So that's it. We're going to see you in a week from now, and we're always wishing you great trading.
Well, I'm going to the city and I'm going to do a steady show.